With us right now to talk retail, the state of the consumer, and those nationwide technical difficulties from over the weekend is Brian Cornell. He's the chairman and CEO of Target. And Brian, it's great to see you on your home turf.
Good morning. Welcome.
Thank you very much for having us here today. We've been planning on talking to you for a while. And then when we heard the news of what happened over the weekend, I guess that puts a little bit more of a focus on what's happening internally at Target right now. What did happen over the weekend?
Well, obviously, a tough weekend, tough for our brand, and really disappointing for our guests. So I need to start out by apologizing to the thousands of guests who were shopping our stores on Saturday and again on Sunday. And unfortunately, we had issues both days. On Saturday, we had an internal issue just tied to standard maintenance that knocked us down for a couple of hours. And on Sunday, we had an issue with our partner NCR, one of their upstream data centers. So a disappointing weekend for us. We let down the guest, our consumer. But the good news was, we were quickly able to determine no data breach, which was very important to communicate. And within a couple of hours, our teams were able to identify the root cause and push the fix to our stores and get us back up and running. But
so weird.
Disappointing performance.
Yeah, it's so weird that it happened. One was an internal issue, one was an external issue. There was nothing related between those two outages?
There were not, but it just happened to happen. So, a difficult weekend. The good news, our teams rallied around it. If you look at some of the social media posting, the number of people who posted stories about our store team members trying to make this situation as as positive as it could be for our guests, and they really stood tall, and our guests appreciated it. But we're committed to doing a better job at making sure we provide greater stability going forward. Brian,
I read one analyst estimate that said it could have cost you as much as $100 million just based on the number of cashiers that were out for the number of hours. Is it material?
We were down for a couple of hours. I think the real question, I might as well answer it right up front, is it going to change our guidance for the second quarter? And the answer is no. We're committed to our guidance from a comp standpoint, an op income standpoint, and an EPS standpoint. And we'll build on our momentum that we started with in Q1.
All right, let's talk about what you're seeing in the consumer right now. Last August, when you joined us back at Squawk Box, you told us that you were seeing a fantastic retail environment. I thought it was the best ever, but you said it was one of the best ever in your career. So what are you seeing right now?
We continue to see a really healthy consumer environment. GDP has clicked down a bit, but we're still seeing strong GDP growth. Unemployment, obviously, very low. Wages are rising. Interest rates, obviously, have stayed in check. And overall, there's strong consumer confidence. So I think what we're starting to see in the retail environment, and I talked about this during earnings, is really a bifurcation between winners and losers. And certainly we think we're in the winners camp right now. We had our best year in 2018 in a decade. Q1 got off to a really strong start. Our comps were up 4.8%. Digital grew by 42%. Our op income was up 9%. And EPS grew 15%. So from where we sit, we see a really healthy environment. But I think you're seeing the separation between winners and losers in retail.
Has growth slowed at all in your stores, just from what you see from consumer spend?
We started off with 4.8% growth in the first quarter. Stores grew by over 2%. Digital was up 42%. We took market share in all of our categories. And our growth was tied to traffic growth, which is really important. So we're seeing a really healthy environment. And others are reporting a very healthy start to the year. On the other hand, clearly there's retailers that are donating share right now. And I think what you're seeing is retailers that have been investing in their stores, in their brands, in their digital assets, in their teams are winning. Those that are trying to save their way from quarter to quarter and can't invest in the omni-channel requirements, well, they're giving up share. So I think we're seeing this separation in the marketplace, but overall, it continues to be a really healthy consumer environment.
You just announced last week that you are increasing benefits for your store associates. You're going to be offering more time off to either take care of a new child or a sick family member. Is that something you're doing because you see Bernie Sanders going around and beating up the likes of Walmart, or is that something you have to do because it's such a tight job market right now?
Yeah. Becky, it's something we started talking about all the way back in February of 2017. And you and I have spent a lot of time actually on camera talking about investments in stores and building new small formats and brands and all the fulfillment options. But you've also heard me talk about the most important investment we made was in our team. So going all the way back to February 2017, I talked about our commitment to building a path to a starting minimum wage of $15 by 2020. Well, we're on that path. But we also recognized we need to think about what else we can do for our team. And we want to have, obviously, the best team in retail. So we've started thinking about what are the family benefits we need to offer. So we're starting to think very differently about paid family leave. And we actually doubled the number of weeks available for our team members. So they can now take 4 weeks. And if they have a sick child, a spouse, a parent that they need to take care of, we give the insurance that we'll do that. And we're doing it across our headquarter team, our store team, and our distribution centers, both for salaried and hourly workers. So really making sure that we provide them the benefits that they need. We want to make sure they also have backup care. Hopefully today while you're in town, you'll see one of our stores. And in our case, half of our store directors are women. It's one of the reasons I'm here today at the conference. And backup child care for a store director that might be running a $50 million business with hundreds of team members that has a couple of kids and all of a sudden they've got a problem in the morning, that backup care is really, really important. So we want to make sure we're providing our team, great starting wages, but also the benefits that they need to ensure that they've got the support that they expect from a company like Target.
Have you spoken with any of the Democratic candidates? Because, doing all of these things, boosting wages, adding additional benefits has been so front and center for so many of them. But you guys have been doing it since before those
we got off to a head
off.
start. So this was not driven by any of the environmental issues that we're talking about today. We thought it was the right thing for our company and the right thing for our business. And again, I've always said, while we've got a great strategic plan that's working, the most important part of our overall plan is the work that our team does. It always comes down to our team members.
Brian, just in terms of things that could affect the bottom line, I know you've been pretty vocal with the administration. You guys wrote last fall to the administration explaining what it would mean if these additional tariffs from China were put on. I know Target was one of the signatory 600 companies that wrote into the administration last week, too. What would additional tariffs mean? I know the tariffs haven't really affected your bottom line to this point, but if that additional $300 billion in tariffs went on Chinese goods, what would it mean to your bottom line?
Well, we're all watching it almost every day, and now it's almost an hourly occurrence to understand what's actually going to happen. And obviously that fourth list is one that's concerning to all of us. 25% tariffs on $300 billion, that's a big number for us. So we're watching it carefully, and as a consumer-focused, family-focused company, anything that's going to increase the cost on essential goods is concerning to us. So I actually look at it with almost two hats on. I think you may know that I currently chair the Retail Industry Leadership Association. Yeah. And if you think about the impact on retail and on consumers, if these tariffs go into effect and prices go up, it could have significant impact on the consumer over the balance of the year. And it's on essential items. It's the car seats you need. It's items for going back to school and back to college in the fall. So particularly if you're a single category retailer and you don't have flexibility in your portfolio, these are tough issues. From a Target standpoint, we have a little bit more flexibility.
A little bit more flexibility, but would you have the flexibility if it was on everything coming out of China? Would you still be able to kind of maneuver your way out of that?
We have this multi-category portfolio, so 20% of our business is apparel, but 20% is beauty and household essentials. 20% is in home, but another 20% is in food and beverage. So we've got more versatility in our portfolio that really helps. We've been in this business for a long time. One of the hidden jewels within our company is our Target sourcing team. Yeah. They've got offices around the world. They're very experienced. They're very talented. They've been working on this for a while. And because of our scale, we've got sophisticated vendor partnerships. And they've been working on diversifying their manufacturing away from for a long time. This didn't just start yesterday. So we've had a head start.
Last year or longer
years and
ago?
years. I mean, you go back to the border adjustment tax. We started thinking about diversifying our portfolio back then. So we've got a few more levers to pull, but obviously, if these tariffs go into effect, prices are going to go up, and that's going to affect consumers and hopefully not impact the current rate of growth in the economy.
Brian, you said one of the reasons you're here today is because you are looking for more women to kind of put through the ranks at Target. What do you hope to hear here? What do you hope to tell the women who are here, the women executives who are here?
Well, a couple of things that I plan to talk about, and it's somewhat ironic based on where we started today. This might surprise you, but we have over 3,000 engineers and data scientists at Target.
That does surprise me.
25% of which, you'll be happy to know, are women. And that number's way up versus a few years ago. And we made a concerted effort to bring more women into engineering. A third of our tech leaders are women. And on campus, our college recruits, over 50% of the recruits we bring in are also women. So we're building that pipeline. We've made a big commitment to diversity and inclusion. I think it's why, when we sit here and talk about our success, it's a combination of those initiatives and the team and the caliber of people we bring in. But I think our commitment to D&I is so important to the fabric of this company. A third of my board of directors are women. Over 40% of my direct reports are also women. All those stores we run, over 50% are run by women. So we've made a real commitment to ensuring that our leadership team reflects the consumer we serve. And we're a family-focused company.
Shoppers are women.
Correct. So we want to make sure our leadership reflects the audience we serve. So our commitment to diversity and inclusion, the steps we're taking, that's why I'm here today. And we want to talk about our commitment to making sure we are a great company to work for. But people realize we're a purpose-driven company. We wake up every day thinking about how we bring a little bit of joy to all those families we serve. But we also have this amazing commitment to diversity and inclusion. And we'll talk about that later today.
All right, Brian, I want to thank you very much for your time today.
It's great to be here.